my guess is we're going to bottom sometime in the summer. I feel like we're in the process of squeezing the excess leverage out of the system, which is what happens during bear markets. All the financial engineering and excess leverage gets squeezed out of the system. You saw that in 2022 when GBTC started to trade at significant discounts and things like Celsius went bankrupt. You're seeing that now with the digital asset treasury companies trading closer to NAV, and with things like Stretch, MicroStrategy's digital credit instrument showing stress, with funding rates going to zero. So I think we're within a few months of hitting bottom from a leverage perspective. And then I think we'll start to recover. I don't think we'll be back at new all-time highs by the end of the year.
With that being said, what is going on, everybody? Welcome back to another CYPRX video breakdown. Again, I'm feeling under the weather, just like in the previous video breakdown. So I do apologize in advance if I start hacking out a lung. I'm sure you guys can tell that my throat chakra is a little disoriented right now. In today's video breakdown, I want to thoroughly touch and cover my personal perspective, considering what Matt Hugin just said from Bitwise, how it coexists with that, and just briefly touch on and go over the market landscape, taking a look at Solana, taking a look at some recent announcements from SBI Holdings and some major conglomerates that are currently working with Solana, building out infrastructure, and just go over my personal perspective and play some video clips from our 3/4 representatives, JP Morgan representatives, and the likes thereof. So hopefully you guys enjoyed today's video breakdown, starting off here with a post that I made to you guys just the other day. I said, I would not be surprised if we see more excess leverage flush out of the total crypto market cap. In 2024, when the market dropped $700 billion in a 1-week time span following the end of July yen carry trade unwind and the August 2nd downbeat NFP figure from the United States, lots of leverage was taken and crypto bottomed. If they push prices lower, Bitcoin would likely fall sub 50K very briefly, but this is an area that I expect they would target before starting to form a real solid bottom. Big ask, but makes sense for them to flush out all the retail leverage that got lucky enough to take longs after the yen carry trade unwound, causing over $700 billion of a drop in crypto the last week in July 2024 before the market rallied. This is not guaranteed, of course, but I'm keeping capital sidelined in case this does happen. We would get another generational entry on major layer ones. XRP would go sub 95 cents. Solana would likely go sub $60, so on and so forth. Would not surprise me one bit. Shake out those longs, then reverse price to Valhalla. If I'm wrong, great. Then we bottom from here. If I'm right, cool. Then we buy more. And so real fast, don't take it from me that we are headed into a generational opportunity. Take it from an individual representative from JP Morgan. Listen to what he says here about how we are entering into a digital transformation and we're likely to see a hockey stick recovery in digital assets, considering that this entire event that took place was at Digital Assets Week in London. Take a second here and listen to what he says. And by the way, just to give you guys this gentleman's credentials, this is Scott Lucas, head of markets at Distributed Ledger Technology, JP Morgan.
And car industry, you are out. So we are to the bandwagon not to lose clients and market share. So we are in the middle of digital transformation. As mentioned, I think we see a small adoption curve, but at one stage we will get into a hockey stick, and then you are either in the play or like the German car industry, you are out.
Right. So he just confirmed that we are in the age of a digital transformation, and eventually we will start to see a hockey stick recovery. Now, just like Matt Hugin said, we are set to see some more excess leverage flushed out of the system, and then we will see a broader market recovery. Now, with that in mind, on stage, they're also discussing and talking about how Solana could play a role in this future digital transformation. The next gentleman here that goes on to speak is Digby Try. He's the global head of sales at R3/4. Take a second and listen to what he says here.
So yeah, we very much believe that DeFi is not going to come to TradFi, that we need to bridge the two, and that's part of the collaboration. We see a lot more of questions from the existing client base of Corda, where the assets have kind of amassed as to how they can bridge that, and that's what we're building out the functionality from Corda to be able to do that, starting with an aggregator where transactions can be validated on chain, moving to a bridge where they can actually be moved. So that's very much the play, just to bring the two together.
Just to push on it a little bit, when we talk about everything, where are you seeing the concentration from across the portfolio of clients you've got today, plus the stuff that may have surfaced through Solana? Like if it's everything, where do you see concentration now, and what might take a bit longer?
Well, that's a good point. So I think you may have heard sort of Guido up here earlier for HQLAX and that sort of collateral mobility use case. There is benefits to situations like that where the transactions could potentially be validated going through onto Solana, just as one of the use cases. But that's kind of a lot of the action that we see on quarter is around collateral mobility. So as one stepping stone in terms of getting comfort, it might be that transactions will end up being validated through Solana. But then further to that, you're looking at more use cases around the actual bridging.
So sitting on stage with JP Morgan, Arthur Quarter mentions to go on to talk about how they believe that Solana has a role in this digital transformation in the future moving forward, which leads me over here to this post. Solana, institutional momentum, and I highlighted this, 7 GSIBs out of 29 have built on Solana. Morgan Stanley, JP Morgan, Citi, BNY, Societe Generale, Standard Chartered, and now SBI Holdings with a brand new announcement that we'll touch on today. And I said, again, not financial advice, Solana trading below $77 is a gift for long-term holders that understand how much value is going to flow through these layer ones in the future. Taking a look real fast at Solana's price action, we have not seen this opportunity on Solana since 2023, where right now, everybody over the past consecutive couple of years that was buying Solana at these areas of interest above $100 is now currently at a loss. And right now, for the first time in the last 3 years, we have an opportunity to get into Solana, again, not financial advice, at a discount that has not been available since 2023, back in December. Now, because again, we're in this environment where we could possibly see another shakeout of excess leverage in the system, these currently are the levels that I'm looking to start to dollar cost average into Solana. We are, for a fact, heavily discounted from all-time highs, trading at about $290 on Solana. So right now, $74. Anything below $80, in my personal opinion, long-term is a great long-term buy on Solana. But I will start to heavily dollar cost average into Solana, much more than I already am now, if we go sub $60. Sub $60, my next target beneath that is going to come in anywhere between $40 to $35 per Solana token. But regardless of that, like I mentioned in this post, I think anything around the current buy offered now, $77 and below, is a gift for long-term hodlers. Now, with that in mind, given this recent announcement, here's another major financial conglomerate that just made a huge announcement. This is from today, Monday, July 13th, 2026, SBI Holdings has entered into a strategic partnership with the Solana Foundation to build an on-chain financial market for real-world assets, stablecoins, and institutional settlement. SBI Solana Global will focus on 4 areas. The first is stablecoins, including support for issuing and distributing JPYSC and other yen-denominated tokens. The second is real-world asset tokenization. The partners plan to bring corporate bonds, commercial paper, real estate. Y'all just go and look at how massive each of these financial industries is, real estate alone, and investment funds onto Solana infrastructure. Real estate alone, I believe the current numbers are well above $300 trillion globally. So just imagine if $500 billion of that money comes on chain to Solana infrastructure, just $500 billion, not even $1 trillion, lowball it, right? The third is cross-border settlement. According to SBI, the platform is intended to connect Japanese financial assets with global liquidity pools. The fourth is payments infrastructure for AI agents. No launch timeline has been disclosed. SBI Crypto's ARM introduces USDC stablecoin lending services for Japanese retail savers. And then it continues to go on, but you catch the gist. This is a massive announcement and just shows that an additional financial conglomerate on top of all these ones who are already building on Solana are picking up momentum and paying attention to layer ones. And they're paying attention to layer ones in the midst of this massive market downturn that we're experiencing, where crypto is providing opportunities for long-term investors that have not been available for over 3 years in the digital asset landscape. For me personally, I will not be sleeping on these opportunities. Remember, none of this is financial advice. I'm not telling you guys to go out there and buy Solana, nor am I telling you all to go out there and buy XDC, because today we had another major announcement from SBI XDC, where SBI XDC Network, July 13th, 2026, announced this. SBI XDC, which operates blockchain-based trade finance solution within the SBI Group, hereby announces the commencement of a collaboration with Deserve Labs, a leading blockchain infrastructure company in South Korea. And with this collaboration, the two companies will be working together to develop new use cases in the Japanese and Korean market, utilizing the Layer 1 public blockchain XDC network. So 2 massive announcements coming out of Japan and Korea in the Asian sphere, APAC sector. Remember, none of this is financial advice. I'm not telling you guys to go out there and invest in these digital assets, but take into consideration what these gentlemen are saying on stage, right? What leaders of financial conglomerates like JP Morgan, R3 are saying. We're in an era of digital transformation, and now's the time to lock in, to pay attention to layer ones that are building and partnering with some of the biggest financial conglomerates in the world. Now's not the time to be fearful. Now's the time to really lock in and consider focusing your attention on things that matter in the space, not just price action, but infrastructure. With that being said, many blessings to you guys. If you enjoyed today's video breakdown, do me that favor, smash that thumbs up button, subscribe to the platform. Remember, none of this is financial advice. Always go out there and do your own personal research. With that all in mind, I will see you all in the next video breakdown.